We come to the last indicator, the parabolic stop and reversal, the PSAR. The PSAR's parabolic stop and reversal identifies changes in price movement. It provides a somewhat early indication of possible reversal in price movement. And it's quite easy to read. It's just a dot below price. It shows a bullish signal. A dot above price shows that it's likely to come down. You can use the parabolic SAR across all different time frames. This is how it looks. You see the dot below the prices that shows a bullish move upwards. Especially if the dot is far from the candle, it shows a stronger move upwards. As the dot approaches the candle, it shows that a change is likely to happen. From upward bullish, as it comes close, you see a downward bearish move all the way until the dot comes close to the candle, and then that upward bullish move again. Without the lines, this is how it looks. On the New Zealand US dollar on H1 time frame, you can see that it actually gives you that view of how the market looks like it's moving and changing. As the distance from the dot gets further or nearer to the candle, you see how trend or direction of price changes from moving up to slightly across and then down again. So it's quite straightforward how you use the PSAR